when the market's confused. Steve strolls in with a chart and some probable news. Troy fires up Omega like, let's model this mess, while traders at home whisper, please help me stress test. It's the show where the candles dance. Volatility takes its chance. Steve says rules, Troy says math. Together they chart a hilarious path. Grab your lunch, don't be late. They'll tell you why the market's weird again. Oh, great. They're calling out levels, volatility rebels, equity drama, and index devils. One guy's calm, the other's pressing buttons fast. Is this bullish? Is this bearish? Ah, depends on the past. So tune in, laugh, and maybe learn to. These two make the chaos look almost doable for you. Every Tuesday at noon, hit that stream real quick, because markets are wild, and these two are slick.
Steve, how the
Happy Tuesday, Troy.
Happy Tuesday. The market is not happy, but whatever. It's had its own party, and it's time for the rest of us for a couple of days, because
it has had quite the party. It's tired, you know.
It has to be tired. Goodness gracious, it's just done nothing but go up the last month. So Steve, I'm tired. Got back from Florida. Steve, you went to Florida a couple of weeks ago. Did you see any lizards while you were there?
I saw a lot of geckos. Yeah,
it's like crazy how many lizards you see in Florida. It's pretty wild. It's like swamp, just giant swamp.
Yeah, I did not see any gators, although a couple of the guys that I was with say that they see them all the time, almost every day.
Yeah, I think if you have a pool without like a gate or something, you will get a gator in there every once in a while. So lots of gators.
Not something we see in good old Kansas City, Missouri.
No, you see those tornadoes more than gators, I think. So
yeah.
How often? I've never really asked you this. How often do you have to go into a bunker in Kansas?
I mean, we get tornado warnings at least once or twice a year. I was in Columbia, Missouri, which is where the University of Missouri is, a few weeks ago for my son's baseball tournament, and I was staying in a hotel downtown Columbia with my youngest son, and a tornado warning came on, and we had to hunker down in the basement of the hotel for about an hour and a half. So it happens. I've never personally actually ever seen a tornado though. So
and may you never, my friend. We got to keep you safe.
Yeah.
So keep you safe, because you got some stuff you're working on that's for the good of humanity.
I've been in the lab, Troy. I've been in the lab. I've become a Claude coder.
Oh boy. Can I show the people what you and Claude have been cooking up?
Let's show the people.
All right. What am I looking at here, Steve?
So I think we may have mentioned this briefly on a past episode, but this is my tool that I like to call Flux. I'm a big fan of the old movie from my childhood, Back to the Future. So I created the DC time machine strategy, and then I needed a tool to help me with that. And so I named it Flux, AKA the flux capacitor. So what this does is kind of the OG Flux version 1 was simply what you're seeing on your screen here, where you can choose the different expiration cycles for a calendarized spread. So you can choose the front and the back. Like right now, I'm on the 10 days in the front, 14 in the back, looking at a 5-day view. The blue is the front IV, the green is the back IV, and then the orange line is the one that I pay the most attention to. That's the ratio between the two. So it's the front divided by the back. So essentially, if you are in a double calendar and the ratio is going up, that means the front is expanding faster than the back. that's typically not going to be good for your calendar or double calendar position. So
Right.
after you get in, you really want to see a decline in the ratio, which means that the front options are decaying faster than the back. And so that's what would benefit. So I got into this position, for example, here this morning because this 5-day ratio has really been on a run for the last few days. And since implied volatility is mean reverting, I'm looking for a little bit of a reversion back lower in the ratio. If I dial that into intraday, which this updates every minute, you can see it opened here, and so it's a little bit lower on the day, so that's good. Obviously, the other issue that you run into with double calendars is price has got to stay in your range too, and we've seen a pretty significant down move. So a little bit red on the trade, but still in good shape. But that's kind of the basis of the Flux. We've also got a scanner where you can scan for different pairs based on the movement of that ratio.
There you go.
I've got my 3 that I'm really watching today are pinned, so I can easily click between those and check out the 910 DTE. That thing's just kind of chopping around. The 3.6 DTE, you can see the ratios pretty sideways on that one as well. So that was version 1, and so that's been really helpful in using a little bit more precision and mechanics around when to enter, and just as importantly, when not to enter double calendars.
It's
one. The new couple new things that we've added. Number one, I'm actually just getting ready to release this today. It hasn't been released to the masses yet, but we added in a risk graph here. So if I am on like I was 1014 as I was before, if I wanted to check out what the risk graph of that double calendar looks like, I could just click on that. It defaults to a 40 delta double calendar. I could change that around if I wanted to go like 35. And then my primary broker that I use is Thinkorswim, and they have that copy paste feature. So I can simply just copy that, and then I could directly move into my Thinkorswim platform, and I could go to my trade tab, could go to my order entry, and I could paste it. And voila, there's my trade ready to roll. So I could tweak the strikes a little bit if I wanted, up the number of contracts, do whatever I needed, and then just enter the trade. So that's been pretty cool for me.
Steve, when did you realize that you're a world-class developer?
I'm a man of many talents, Troy. I don't know if you knew this.
I'm learning more about you every day. Now, do you speak kindly to your Claude? We have internal debate here at Option Omega. Do you speak kindly to your Claude, or do you tell your Claude like it is?
I'm usually very nice and polite, but when it doesn't do what I want and I ask it multiple times, sometimes there's been known to be some profanity come out against Claude.
Yeah.
And what's interesting is it usually straightens right up and does exactly what I want after I do that. So
yeah, like a scared little child, as it should be.
Yes.
Yeah, I love it.
Now, I will say, just to be fair here, this is not all just me. I've got a very talented group of members. Joseph T, mainly, he's been my mentor in clodding, and so he's kind of taught me everything I know. And what I would say as far as this app goes, he's built the foundation. He's put up the walls. He's put the roof on. I've hung a couple pictures. I've done like the interior design. That's how we're kind of structured. So I can't take all the credit for this, Troy.
I understand. It's a team effort, but it's not the Joseph T show. It's the Navigation Trading Show. So we'll try to put it there. But shout out Joseph T while we're at it. That's good stuff, and it's stuff that's cool. I mean, I think that's AI's allowing people to do a lot of stuff that they didn't think were possible, and it's a lot of stuff in my mind that, like, I consider it. This can sound like a down thing, but it's hobby level stuff, but it's stuff that's super useful to the individual trader, and it gives you the ability to see things in a way that you want to see them. in a way that we never had that before. So I think it's really cool to see these type of projects playing out, and how ideas that probably you're bouncing around in your head for years that you now can just do.
Yeah, it really has. In fact, I reached out to you three, you, Matt, and Rusty, and I was like, hey, do you
Mhm.
guys know of a tool that shows this with the IV and this and the relationship and blah, blah, the whole deal. And you guys didn't really have any ideas. And then I just went on a deep search trying to find something. I couldn't find this anywhere. And so, you know, it really was something that has kind of been in my head, and I was able to splat it onto a web app, and it's been really, really helpful for me. And I know a lot of our members have been using the crap out of it as well. So it's been awesome.
That's awesome. And I know you're using it primarily for transforming DCs, if I understand correctly. So how I don't think we haven't. I was out of town and you were out of town. Can we talk about April results? Because I know you post everything. You're pretty transparent, and when I say pretty transparent, navigation's probably the most transparent options education community I've ever seen. So
Yeah. So I started tracking all my trends because it's easy to, with all the different adjustments and option spreads and things like that. So here's my April results for transformers. I did 42 trades. You can see only 54% win rate, but obviously win rate isn't really that big of a deal if your winners are bigger than your losers. My largest trade was a plus 9,800. My largest loss was only 1,700. And so booked over 44K, and you can see some other statistics. Return on capital, 23%. Annualized would be 220%. What's cool about this, I talk about in my Transformers class a lot, is the power of recycling buying power. So if I have a trade on, which obviously carries risk at first, and it obviously uses buying power from your broker, but the minute you transform that, you remove the risk and you get your buying power back from the broker, and now you can go redeploy that into new trades. So for April, for example, there was never any time where I was using more than $60,000 of buying power, and I was able to net over $44,000 in profit. So as far as kind of return on capital, of return on risk at any one time, it's a pretty powerful concept.
what did you say your buying power usage was on that comparatively?
Well, I never used more than 60K at any given time.
Okay. Yeah, that's not a bad month, is it?
So you can see, I mean, total invested. So total buying power across the board for the month was over 193,000, but I never had on more than 60 at any given time. And that was for one day, for one period. Usually it was closer to, a max of 40 or 50K at any given time.
Yeah. And what's your criteria when you're deciding to hold them overnight? I've noticed that you're more willing to hold the longer dated ones, which makes complete sense, right? I mean, but do you have any kind of internal criteria? Is it one of those things where you're just kind of looking at market dynamics and saying, I don't mind holding this tonight?
Yeah, here's what I look at. I look at, okay, if I have a if I have a double calendar spread on, I look at kind of what my basic range is that I could play around in and not get hurt. So maybe it's down 50, up 50, and I'm still kind of break even to fine. And then I look at the expected move for the following day. And if the expected move is 70 and I can go up or down 50 and not get hurt, then I feel pretty comfortable. Obviously the variable, the wild card is if price moves beyond the expected move, which it can at any point, then you can still obviously get hurt. So I look at the expected range, I look at my current position and determine, where it's at with that. And then I also look at, if there's any red folder news. I use Forex Factory, just to look at if there's any red folder events. Like this morning we had CPI. So I didn't hold anything overnight. I just don't want to play with that kind of fire. CPI has a tendency to move the market.
Case in point,
I didn't need to hold that risk overnight. It's just not something, if there's been some of these like war ultimatums that were supposed to happen at certain periods. I don't necessarily need to hold that risk overnight when that kind of thing is looming. So I look at current events, I look at option pricing, I look at the expected move, and then I make the decision on whether I want to hold that overnight. And typically what I'll do is if I have a position, let's say it's 20 contracts that I'm holding during the day, I might close or transform 10 of those at the end of the day and hold 10. So I'm even if I'm holding overnight, I'm holding less exposure.
Yeah, no, it makes total sense, and it gives you confidence because I've been following along, and knowing that you're probably most likely gonna like if you were doing trades. I use this example for navigation all the time. Like when I was a young pup and I was learning to trade, I followed navigation as I still do as an old pup. But when I was really learning to trade options, I followed navigation. This was 8, 9, 10 years ago at this point. And you had a McDonald's, I believe, double calendar. Okay. As a put spread or something. And it was like, it was like 30 days out, 60 days out, something crazy. And I sized up because I had complete trust in you. And
that's where you made your first mistake in life.
But it went against it. And you were not panicking at all. But the account size for me at that point, I was panicking because I was like, because if you don't have confidence in what you're doing, you'll get out way too fast. And that's what I did. I exited it at like break even. It would have been like a full winner if I just would have followed you to the end. Well, what gives me a lot of confidence in the way you're doing it right now is I can size up because on any given time frame, a 1 day time frame, I know that you're going to get out of this trade. I'm not going to be sitting here with $50, $60, $75,000 of DCs that I don't know about. I'm just following along. And I might, you're going to hold them for 30 days. No, you're going to be out most likely at the end of the day. And it just gives you confidence to size up. I'm not saying size up. Options involve risks. I'm just saying personally, I've put on more of what you've done simply from the fact that I know you're going to be out. And so I'm not worried about that at all.
Yeah. Yeah. And the cool thing with these is you really only need somewhere between a 5, 6, 7, 10% profit to be able to transform it and remove all the risk. And so, there are many times where I can put on like a 912 DTE or a 910 or some expirations in the following week where you've got a really nice wide range for price to move around in. I mean, price can move beyond its expected move for the day and you're still fine. Because you're using longer dated options, but yet you still have the opportunity to transform those and remove the risk in the same day. So, a lot of new folks come in and they say, well, can I do this with like a 1-2 DTE and a 2-3? Yeah, you absolutely can. The question is, why would you? Like the amount of gamma you're exposed to. I mean, a small move in the vol structure or a small move in price, you can be in the red pretty quickly. Sometimes they do transform much faster, so there is a balance, but you don't need to do that shorter duration. You can do next week's expirations and still transform or book profits in the same day and hold no risk overnight.
Yeah, absolutely. And you also, this is like I have one. I think it has to be from you because I haven't really been doing this without me. I've got Iron Condors expiring in 2 days that I think were from last week, the DCs that transformed. And I have a bunch of them on. The nice thing about that is, I know people, when I was looking at this strategy, I was talking to some friends and they were like, why not just take the profit, right? Why not just take the profit and not leave the thing? Well, the nice thing about this strategy in my mind is like, I just took off a couple of the Iron Condors a while ago. You can just scale out. Like it's not either or. You know what I mean? Like you can take profit on some of the DCs and lock it. You can lock all the DCs and then take profit on the Iron Condor. Like you can play it a bunch of different ways. And
yeah, you're not locked into expiration for sure. Usually once I transform it, I try to hold it pretty close to expiration just because I'm trying to let the probabilities play out. And I'm just pumping out these risk-free Iron Condors, all over the place and just kind of letting them go. But even like Friday, I did a 6 front 7, so 6-7 DTE
6,
I
7.
ended up I ended up closing out half of it for a nice profit, book that profit on the double calendar, and then transform the other half. So yeah, the flexibility is there to do whatever you want, really.
It's nice. I mean, it really is just a great way to trade. I mean, I told Steve when I first saw it, I was like, it's kind of my dream in some ways for DCs a little bit, because you can kind of, I mean, DCs definitely have a seasonality to them. I was just talking to Mark Anderson about this. DCs definitely have like it's not just a statistical thing that you're playing. You're playing actual Greeks when you trade DCs. And those are replicable through time. And the Flux is doing that. The Flux is showing you some of those patterns. So yeah, the nice thing of the idea that you could put on a 3 to 5 to 7 to 10 to 10 to 13 day DC and get out the same day, that's a different world than people are used to, who are just now getting into options with 0-day stuff, you know?
Right.
So
Yeah, I think the people who struggle a little bit more with it are the people who are used to that fast, short, 0 DTE stuff. Coming over to this is a little bit slow and boring, but the people who I think it really clicks for and they love it right away are the people who they were already trading double calendars and they were holding them for 5, 6, 7 days.
yes,
And they're like, oh, this is a no-brainer, because
yes,
now I can either hold like I have been and try to book more profit, or I have this new kind of tool where I can transform it and remove the risk at any time I want. So it's kind of a
exactly.
cool little feature.
So I have to ask, because the navigation audience, trading show audience is the best in the world. Shout out navigation trading show audience. Can we expect another DC put on this afternoon from Steve at Navigation?
Well, I've been looking at the ratios. I've been looking at my Flux, kind of the 3 combos I've been really looking at are the 3-6. Again, just kind of sideways, the 9-10, kind of sideways. And then I've already got on the 10-14. Really what I would want to see to kind of play with that mean reversion of implied volatility is I'd like to see a spike in one of these ratios in one of these pairs before I would enter another one. Otherwise, I will probably just stick with my 10-14 today.
Yeah, makes sense. And do you think 10-14, do you see it? We approached the short strike earlier in the session. Do you see just closing that, or do you see kind of maybe holding it depending on if we get a rally or not into the close?
So we do have PPI tomorrow. If we check out the old calendar, we've got PPI tomorrow, and then we've also got that Fed nomination vote, which is tentative tomorrow. So I don't know when that's scheduled to. I'll have to dig a little bit deeper. You don't know when that happens, do you?
No, I don't.
I would assume it's after the bell. So, you have time tomorrow morning. And PPI, who knows, could move the market, but probably not too big of a deal. So if my 10-14 gets closer back to center, that's the other thing. If it's kind of hovering on a strike or hovering near the downside break even, I'm not going to hold it. I'm just going to cut it for a loss.
Yep.
I don't want a big gap overnight and then take a lot bigger loss than I really wanted to. So that's the other thing. If I hold overnight, I'm typically doing it when the double calendar is fairly centered.
Steve, you're the man. I love you so much. You're my best friend.
Troy, if you don't mind, I've got one other thing I wanted to share.
Yeah, please.
Going back to Flux, one other feature that we just added is the earnings trades. I don't know if you've seen this.
I did see this because I get the early access stuff. But yes, sir.
So, staying within the whole implied volatility and option pricing, we added a new earnings tab. It's still in beta, still kind of making sure that everything is as we want. But basically, the way that we have this structured is you've got your earnings calendar. So, for example, Alibaba is reporting before the bell tomorrow. So if we pull that up, you've got the expected move, both as a percentage and a dollar amount. And then you've got the historic rate that it exceeds its expected move. So this is based on the last 5 years of data. So the last 20 earnings announcements. So you can see how many times the stock exceeded the expected move, which is this yellow dotted line, versus how many times it stayed within the expected move. And then it kind of bottom lines it here. So 40% of the time it exceeds the expected move, 60% of the time it stays within the expected move. So not a huge sway one way or another on that. But and then what we're looking at is looking at the historic move of the gap, so the close to open, the expected vol crush of how much the options typically crush after earnings. And then we take the adjusted move after the crush. And so the implied volatility or the implied move minus the adjusted move gives us an idea of how much the options are overpriced or potentially underpriced. Binary events, they're typically going to show as overpriced, but gives you a figure of how much that is. And then we've got some data showing the for the day after earnings, so the post earnings information, to give you an idea of, okay, if it gaps up within the expected move, how many times has it done that, and what has the tendency been? So in this case, it's averaged going down 1.8% the day after earnings if it gaps up within the expected move. If it gaps up above the expected move, beyond the expected move, what has it done? If it gaps down within the expected move, gaps down beyond the expected move, what's the tendency? And so it kind of gives you some statistics to play with after earnings. And then it gives you a 20-quarter breakdown of what happens between earnings and the next session close, between earnings and the next gap open, some historic earnings moves and kind of what those were. Some fundamental data like the actual EPS, actual versus estimate, and then your kind of top 3 news stories of that stock. So
I see that you have the Claude Pro plan because you've been cooking over here.
I actually upgraded from Pro. Now I'm on the Claude Max.
Oh, crap. Dude, that's, again, this is the thing that's super interesting to me is like that stuff's so useful, super helpful. And that's the power of APIs now. So I will probably put on Baba because I didn't realize. I mean, looking at that real quick, would you play Baba with this information right here?
It definitely doesn't. It definitely doesn't give me any real validation of something I'd really want to go in on. But it stays within the expected move 60% of the time. So I would probably, if I do anything, oh, and then here's another thing. After exceeding the expected move in a quarter, the following quarter exceeded again just 29% of the time. In this case, 2 out of 7. So sometimes I'll look at that as well and say, okay, it exceeded last time. So the options may be a little bit more juiced, maybe a little bit more tendency to stay within the expected move. If I had to do anything, I would probably do something delta neutral. Yeah. I would probably trade like a calendar spread or a butterfly or something like that. I don't know. Like I said, it doesn't really sway me one way or another with this historical data.
Well, that gives me some afternoon lunch work to do looking at Baba now. So thank you for that, Steve.
But yeah, I always take my earnings trades during power hour, so I'll make a decision. We've also got NBIS tomorrow morning. We've got OKLO after the close today. I'll check all of them out.
Are you pulling like every earnings or just top liquidity?
Just top liquidity.
Yeah.
Basically top 100.
Yep, that's the way to do it. Dude, that's awesome. I'm going to dig into that. So, Steve, where can people find that information?
So this isn't something we're charging for. It's just all of our pro members have access to it.
Okay, awesome. So join navigationtrading.com. I think it's navigationtrading.com. Navigation Trading, you'll find it. That's awesome. Steve will find you if you look. So, all right, guys.
We're out there.
Have a great trading day, and we'll talk to you guys soon.